Today I'm abusing my producer. The American dream is still alive. You just have to be hungry and you have to have your own plan. Because if you don't have a plan, if you don't have your own plan, someone's gonna plug you into their plan. And it may not be the best plan for you, but shame on you for not coming up with it yourself. Hey everybody, welcome to another episode of Money in the Bank with Frank. Today on this wonderful summer edition, we are going to be talking to my producer, Sohail. And we are gonna walk through a little bit of a not quite true situation, but to walk through specifically how a interaction between a financial advisor and a new client might go. I hope you guys like it. Now on for the fun stuff. So I would love to start off with a little feel-good story. These are the little things that actually make a financial advisor really happy. I got a phone call yesterday from a friend's daughter, so we'll call her my niece, and she was like, hey, I have a favor to ask. And so then you're like, okay, you know, does drill team need money? What's going on? You got to come up with something, right? Turns out that no, this young lady who is, and I guess her whole life has been serious about saving her allowance, she saved up a 5-digit sum of money that she wants to do something with. And as a saver, she wants to know, hey, can I help her learn how to do something in the stock market? And I thought, wow, what a great opportunity to take someone who's a blank slate and actually make that better. And do something that's good for the world by trying to teach someone that has zero expectations or information. And so I'm really looking forward to that. My intern's gone, which means I have to do everything myself. So at least now I've got something to work with. And again, that's just something that all the parents out there, you should really consider. If your children are savers, or if you know that they have a fascination with some type of wealth, now is a perfect opportunity to start teaching them about saving. And if you don't do it yourself, that's okay. You only have to be one day further advanced than they are in order to give them good guidance. So my little tip for the day, hey, take this opportunity to look around, take a thought process of all the different nephews and nieces you have out there. And if there's something you can do to help them be a better person, why don't you take that step? What do you think, Sohail?
Yeah, so on that note, I've been thinking a lot. Your conversation with Jim last week, as well as just me reaching I think a turning point in my life. We have these flashpoints in our lives, right? Mm-hmm. And thinking about finances again in a different way. I've been thinking a lot about goal setting and priorities in terms of where to put my money. To achieve those short terms and then eventually long-term goals. And that's probably right up your alley, huh?
Yeah, absolutely. You know, one of the things that I find fascinating about people that started off in my line of business, and even people that are in it now, if you go to a Fidelity or a Charles Schwab, I would say TD, but they're merging with Schwab. But if you go to some of these independent what are known as discount brokerage firms. And please understand, when we say discount brokerage firms, it's just not the full service relationship where you're talking to the same person over and over again. And they actually, for the lack of a better term, own their own book and own your relationship. They just are really helping you with a spotlight of where you are right now, today. You'd bring in all your statements and you sit down and talk to them. They will take a look at you, and based on where you are right now, they will tell you if you're on point or what you need to do. And then the rest of it's on you. Where a full service broker would actually then take all that information, parse that data, and help you with a plan and help you execute it. That's the difference. That's the difference between the two types of financial advice. So what I would say to you, Sohail, other than me helping you, which I'm more than happy to do, if you get to a point where as we all do, for whatever reason, there's a lot of times that people don't want to talk to someone that they're too close with. They don't want them to know their financial system. I've got best friends. I don't know how much they make. They don't know how much I make. We know that we all do okay, but it's privacy, right? So it's good to have a third party neutral. If you don't have somebody that is really good at finances that you trust, find a third party neutral. But that is what I would say. So for the people out there like you that don't have someone to talk to, go to a Schwab, go to a Fidelity, go to one of the discount firms, and use that as your first opportunity of dating. See if that's what you want, if that's what works for you.
I think my immediate question, so I'm guessing everyone else's immediate question in my situation is, how much does that freaking cost?
So, zero, right? So what happens is when you call them up, you schedule an appointment, you say, hey, I want to walk in, I want to talk to somebody. If you have all of your stuff, you may be able to sit down with somebody right then and there, and it's not going to cost you anything because those companies will, hopefully have a product that, there's a reason you walked in there. There's a reason. You may have some money sitting in a savings account making 0% interest. You may have a major need. Somebody passed away and you don't know what to do, and you don't want to go online, and you don't know anyone to ask. You haven't gotten a referral. Any of those places will see you, and they're hoping that if they guide you and they give you the right tools and information, you'll make your own best investment decision, which is to say you'll buy something from them, right? So it's not going to cost you anything to see them. It's not like a law firm. As a matter of fact, here's a little tidbit that people should really consider. Before you go to your attorney to figure out whether you need to incorporate and how much that's going to cost, why don't you go to your financial advisor and find out if that's what you really need to do? Because they might actually guide you to a less expensive alternatives for something that isn't as complicated as it may be. If you have an estate plan where you've got grandchildren, you've got different pieces of property in different places, you work for yourself, you have multiple K1s. If you don't know what a K1 is, you probably don't have that problem. If you have something complicated, then yes, you're probably going to want to go see a professional and pay that money for expert advice on your estate plan. But if you're individual, single, just starting your first company, go see a financial advisor. They're going to give you that information for free. You're not going to have to pay for an hour. That's not the way that the industry works.
So, okay. Let's just say, let's role play that I'm going, and this may or may not be factual information about me. It's just a scenario.
Sure.
But let's say, I'm...
Yeah, let's role play. Let's do it.
Basic demographics, like I'm 29, I'm...
Can we start off properly?
Yes.
Hill, good to meet you. My name is Frank Kushner. I'm a certified financial planner. I've been in the industry for over 25 years. I want you to know that there are no dumb questions, okay? That, it's just like building a snowman. More people, you start off with a small ball and then you make it bigger. So whatever questions that you ask me, we're going to build on those. All right. So I don't want you to feel intimidated by anything that you're going to tell me. And I also want you to know that because this is fake, this is a lie, but just know that what we talk about here stays here. I'm not going to share this with anyone, friends, family, the person that referred you. This is between you and me. All right. So I want you to feel comfortable. Now, on that note, please tell me, what was it that brought you in here today? Let's talk about that.
So I feel like I'm in a flashpoint in my life, and things can go many different ways, and I'm sitting on some savings, but I know student loans I'm gonna have to start repaying again soon. I know that I need to purchase a vehicle ASAP, and I know that a big thing is I just, I'm dating someone, and it's recent. It's since February, and I know I've been told, obviously keep your finances separate, but just thinking about aligning our goals, aligning what we need to do individually and together to achieve those goals. I think I just need a little guidance in what to do with this chunk of money that has honestly just been sitting in it, not even a savings, but a checking account, because my savings account would give me pennies, but that's kind of what's going through my mind.
Sure. No, I get it. And what I'm going to say is everything is individualized. I'll say that many people approach that partnership in a completely different way, depending on your stage of life. Now, if you guys are both coming from the same place, which is like not much right now, and you're growing together, it's less of a stress. But the most important thing is to be absolutely honest with your partner as to like, what the finances look like. Because if you're doing well, or represent that you're doing well, and you get them used to a certain lifestyle, it could come back and haunt you, right? So there's a great book that I keep talking about and I keep not finding it online, called like 13 questions that are really important. Like if you're in a serious relationship and you think it's going to move forward, you should get those out of the way first and foremost. But let's address the earlier and easier problem, because right now, regardless of whether this relationship goes anywhere or not, you have money sitting in the bank doing nothing for you. And what do I always say? Give your money a job. You have a job. Your money should have a job. You need to beat inflation. This year, it's going to be harder than it has been in the past 20, because inflation is actually going up and interest rates are going up. So that amount of money that you need to do to give your money a job, while the stock market is a little sketchy and no one knows what's going on. And oh my goodness, I would hesitate for you to take all your money that you had saved up and stick it in the market all at once right now, because if the market came in, you might never put money into the stock market again, right? People have been burned and they don't want to be burned again, So what I would say to you is, step one, there's so many different options in investing those short-term money into something liquid that's going to pay you more. So even in your checking account or at your bank, you can ask them to move that money into a money market, right? And that money market will have a higher rate and will be as liquid as the checking account. It's just as easy for you to go right online and say transfer from your checking account to that money market account. Now, let's take that a step further. And let's say that you're at a stage of your life where you're already settled, you had your emergency savings set up, you had that in a money market, and you had a little extra money that you wanted to put into the market. Sound about right?
Okay, so this is where it's going to get deep, right?
A little bit.
Let's go for it. Me personally, we're probably not talking levels that your niece is talking, especially after. So first of all, I have debt wise, I believe all the debt I had credit card wise has been moved. Like I forget the term, but it's off my credit report. Like my credit's going up.
Yep, great.
I'm approved spender on like multiple of my brother's credit cards, and he just is helping me like that. And but I don't have any personal credit cards anymore. Now I have a lot of student loan. That is what it is, minimum payment type deal. So assuming debts are clear, then I would probably have somewhere around just sitting there. Let's say, hypothetically, no one steal this from but let's bleep that. No.
No. You have a chunk. You have an amount of money that's not insubstantial.
But it's not substantial either, because to me, I'm going to probably try to spend half of that immediately, or like $5,000 on a car or a down payment.
Right.
And so I'm going to be left with, let's just say, like, you're left with a couple of grand that, to me, that's my savings. Like, I don't want to,
It may be a Yugo, but to you, it's a Cadillac, right? I mean, you don't even know what a Yugo is, which is really funny, but that's okay. Yeah. So everybody starts off in the same boat, really. I mean, we all started off, well, unless you happen to be born to a family that has money and is just giving it to you. But ultimately, we all start off in the same place. We start off completely clueless about money. Maybe we had an education. Maybe we learned how to count. Maybe we learned how to balance a checkbook. Maybe we didn't. Ultimately, what happens through the stages of life, hopefully, is that you get a job, you start being productive, you start making a little bit of money, you cover your expenses, and then you have extra, whatever that extra is. Doesn't matter whether it's 10% of your income or 70% of your income left over after you pay your bills. Step one is you have to pay yourself first, right? So we talked about that when it came to your retirement accounts, right? If you have a 401k or an IRA option, then you want to do one of those first. That right there is going to help you tax-wise, as well as put it into something that you don't see every day. And when you don't see it, you don't spend it. The negative about having money or securities that are not in a tax-deferred or tax-sheltered account is that you see that money and you want to spend it. And we all do. We're Americans. We live to our means and we spend what we make, right?
What if so I know that's responsible, and that's, especially with you and Jim's conversation, had me a lot thinking about, the living by your means and growing up with people differently and making different decisions. But what about for people who have mistrust in even sticking something in an IRA or sticking something anywhere that's going to sit there for decades? That, like, I guess it's a scary time with financial institutions, and we've been talking about it for months. So how would you respond to that?
Yeah, well, I would respond to that saying that, first of all, brokerage firms are completely different than banks, right? So brokerage firms traditionally are, and you got to call a spade sometimes. It's a place where people that actually have more disposable income than not will put their money, right? Stock market isn't something that, shouldn't be something that people are using to gamble. They do, and they have over the past, several years, but you're seeing that come to an end as now all the money's gone and people are starting to go into credit card debt. So you're going to see that normalization as well. Before it was, YOLO to the moon, because they had that extra money that wasn't theirs and they weren't used to seeing in their bank account. I like people being greedy, fear and greed, right? If you're fearful that you never want to be in a bad situation again, you're going to save. If you see that your bank account is growing and you have a good chunk of money in that bank account, you're going to be greedy and you're not going to want that number to go down. The problem is you have to get there. If this is the problem that people have when they win the lottery, they didn't actually earn it to get there. And so to them, it's like easy come, easy go.
Right. I think this opens up the main battle in my mind. It's the psychological element of financial planning, of money. It's so
wait, let me further that thought. So I want to address the specific thing that I take issue with when you're telling me that you're concerned about putting money into a financial institution like in an IRA. My point there is that if you put your money into XYZ brokerage firm, I don't care if it's a discount or a full service firm, and that firm goes to zero. Look at Lehman Brothers, right? Perfect example, 2009, bankrupt. What happened to all their client accounts? All their client accounts got transferred
they get
to
bought
another
out,
firm.
right?
Yeah, they get given, literally given, and then there's a buyout, and depending on the debt structure and who may have securities in that specific firm, right? Now, if you said that, hey, I put my IRA in at XYZ Bank and I bought XYZ Bank stock in that account, then yes, you're dead in the water.
Right.
But if you buy IBM in that account and it's growing and that firm goes to zero.
Yeah, they don't take it.
They don't take it. It's going to go over to XYZ firm. Look
It's
at
not
what happened
FTX.
look at what happened to Credit Suisse and UBS recently, right? UBS took over Credit Suisse. It's your bank account is now UBS.
Right.
So that's step one. Second part of that is the difference is you're not spending that money. And this is a critical thing that people just have a hard time understanding. When someone opens an account at a brokerage firm, IRA, non-IRA, 401k, any kind of account, It's your account. It's your money. You're still able to see it, to touch it, to access it. The only difference and restrictions may be specific to the type of account that you set up. You've got different bundles of money, different pockets of money. This might be your savings account. This could be your brokerage account. This could be your checking account. You have different types of account meant to do different things and are treated differently for taxes. And that money is still 100% yours, Sohail.
So, okay, so I posited the mistrust thing honestly as for other people because I don't have I understand everything you just said, but that segues into the other psychological element of I know that, but also I grew up, my family's always struggled and still they've got to a point of comfort, I would say, for us, but not, not
Not Elon
the
Musk?
most literate for, making their money make money
Sure.
or, going after more, right? A big psychological play for me is that tomorrow's not guaranteed. And so whilst I know that saving this money and not going on this trip that'll cost me 1K, or let's say 3K, whatever, is going to benefit me in the long run and not put me back. Also, so this is a specific example, right? My mom has not been back to India since I was born. I went when I was 2, so it's been 27 years, right?
Mm-hmm.
We have never been able to save to go as a family or just her individually because we've always spent that money sending it to India, sending it to family, or bringing back and forth to grandma. So even now, saving up that money is a struggle because of the lifestyle, everyone's accustomed to. But even if we can do it, which we may now, it may not be the best financial decision for me to go on this trip with my parents to their birthplace, their, our place of heritage, which is very important for me to share with them and for them. And it's like they're 50 years old, who knows how long they're going to be here? Who knows how long I'm going to be here? How do you weigh that risk as a financial advisor? I mean, I know as a financial advisor, and even you personally, you have that brain. It's like, don't do it if you can't do it. Or, even if you can do it, but can't do it, if you know what I mean. But how do you weigh that as a non-financial advisor?
I need to tell you a fun little story. I started out my own practice, my very own. I had left the bigger firms and I started my own company, and I was living in New York. I was struggling, right? I had a certain amount of money coming in, and it was nowhere near enough to cover what I was paying for rent and for rent for the office and everything that was going on. I knew that I would grow my practice as time went on, because I was your age. I was pretty young still, just starting out. And I got this amazing opportunity. I happened to be invited one night to a Yankee game, and we were in a box. And in this box was, all the big wigs from Continental Airlines at the time, before it was United. And they had put this event together for their biggest clients that spent, tons of money at Continental Airlines. And the person that was there from Continental said, hey, I would love you, me and my friend who she knew we were both pretty avid sailors. Continental is putting on this event. We'll fly you first class. You can stay over in Bermuda at the Elbow Beach, free for a week. It's going to be, all expenses paid. Would you go? Now, keep in mind, this is a month into me starting my own firm. I'm super stressed out. I don't have the money for it really, because even if it's free, you're going to buy stuff. Totally stressed out. And my assistant, Neil, who much more life experience than me. He said, Frank, can I ask you a question? And I'm going to ask this question to you right now, Sohail. When are you going to get the opportunity to spend that time with your family to go see your homeland and spend that time with them ever again in your life? I would say you can't afford not to go. You're going to survive. You're going to wake up tomorrow. You're going to wake up the day after you actually get back from that trip, and you're going to be stressed out, yeah. But is it going to be any more stressed out than you are now? Probably
No.
not.
And, my FOMO brain, of course. And if it happens, it happens. I'll go and I'll be fine. Like you said, I know what I need to do. It's daunting, but a lot of people probably need to hear this. You look at your expenses, your habits, you find a budget. If you're lucky enough like me to have a little saved that you could go on this trip, then you just budget out how to build that back. And that's the thing. It's like I worked. You see me here. I mean, even though you think I don't work that. No, I'm kidding.
Oh, my goodness. How dare you?
But I feel like I worked hard for those numbers in my account.
Yeah.
And they can go like that on a plane ticket is very like stressful. Even though I know the value of it. And yeah, that's a reassuring coming from you, hearing that, because it will be okay. I'm not in a crazy dire situation, but yeah, I think a lot of people need to hear that. I think I agree. I think there's a level to that kind of thinking. Like, this is a major thing.
Yeah.
But maybe the going out with your friends tomorrow night does not fit within that level of FOMO.
Right.
You know
Look,
what
there
I mean?
are critical decisions you have to ask yourself when you're spending any kind of money while you're saving up. But the one thing I will say is that I have seen way too many people that saved all their money, and then by the time they're able to retire, they've already been disabled, or they're not going to be able to do the trip that they wanted. Maybe they're, you think your golden years are going to be great because you've, empty nested and you got rid of your kids, but then your kids have kids. Right. And maybe, just maybe, your kids are struggling. And so, grandparents are going to take care of the kids while, because maybe for any number of reasons they can't afford childcare. Maybe childcare isn't an option. Maybe there's, and then throw in an additional factor of, 1 out of 5 of us doesn't make it to normal retirement age because of some kind of disability. So you have to live life. You have to remember specifically why we're here. We're here for a very short time, and hopefully we get to experience good things, right? There's a lot of people out there that unfortunately do not get to experience good things. But, we've gotten to experience some good things, and you need to take into consideration that shouldn't be free. You should work hard for those because it makes it that much sweeter. But when you do get these like once in a lifetime opportunities, you have to take them. You have to. You need to be very smart about what you do when you're there. Realize, you're where you are. Try not to get taken because, when you're in India, that money's going to feel like monopoly money. It doesn't look real to you. It's not what you're used to. And so you may be tempted to just like hand this guy a wad of cash that you have no idea what it is just because you don't know and you don't care, right? So I would say you have to do trips like that, but you know when to be smart too. And if you don't, learn. Like what I would say to you, this is just a fun aside, whether you want to put it up on the thing or not. Use your media, use your personality, your media personality, use your connections. And while you're in India, see where you're going. See if there are any studios while you're there. See if anybody wants to do something. Use this as a write-off, right? So come up with some different ideas that you can actually do business-wise while you're there, because there are going to be some things I suspect that the family's going to want to do that you're going to want to get away from. So consider that. You may actually make some money while you're there.
Yeah.
Right?
It's wild. I was looking at just rent in even Bombay or Mumbai compared to like New York or something. And man, if I could like get a U.S. salary and I don't want to live there, but but that's an aside. But that's a good piece of consideration. I wanted to go back to, you're talking about your golden years, and that reminds me of my parents and how they live their life, and I think it's beautiful because they they live their life, and not even considering about grandkids or any of that. It's just, you live your life, things aren't guaranteed. But then the flip side of that for the kids, it's like, I know they're going to get old and I want to take care of them.
Mhm.
And that's a consideration of, I guess, I think when you start hitting my age, you get these realizations of this is the balance of life. This is, there, I don't think the concept of golden years really exists. It's life. Like, you're being taken care of and then you're taken care of. And I think I might be in that maybe in my 30s because my parents hopefully are fine, but
Yeah, and the as they get older, there will be other planning steps that you're going to need to take into consideration. What they've done for you, you will never do for them. There's just no chance in the world that your life will allow you the flexibility to physically take care of them the way they took care of you when you were completely
helpless.
Helpless. Yeah. So you have to take a step back and realize that just like they are going to have to deal with a lot of this, you are as well. And you cannot put yourself in a position, you cannot compromise your future well-being for them as much as you want to, unless you get to a point where you are, literally fiscally capable of doing that. So you can't spend all your money in anticipation of giving them a great life at the detriment of your own.
That's a interesting conversation when you play in cultural dynamics and the American individual mentality and the get rid of your kids at 18 and then they'll maybe you fend for yourself or put yourself in a home. It's like I have seen my dad sacrifice so much. Mm-hmm. And like just people of our culture, it's just a different idea of life and life cycles and the sacrifices you do make to take care of your parents. And I think moving here, finding that balance between taking the good from the American cultural standards of life and individualism, but also the communal, familial. That's the story of my life right there.
Yeah, the structures of the company, the structures of the countries that you're talking about are radically different for an aging population. We all know that while Medicare and Medicaid does a pretty good job of covering some medical expenses, it doesn't do a good job of actually care, right? And neither does the insurance system. It doesn't actually help you with wellness. It helps you once you've actually gotten sick and to varying degrees. But, again, you're right, especially in the culture, which, Indian culture, Middle Eastern culture, above all, family, right? And taking care of older family is like critical. But here in the United States, it's just not fiscally feasible for the majority of people. So, as I said, your parents, my parents, they had pension plans that paid them a specific amount. You worked for the school district for 20 years. You're going to get some portion of your salary for the rest of your life. Do you know who doesn't have that?
I for sure know I don't.
That's right. So do you think your parents understand, as long as they do or are made aware, do you think your parents would want you to literally be broke and living on the street because you didn't put money away into your retirement plan? Right. Because guess what? Their company put money away for them because their company was responsible. They individually, if they had the choice of putting money into a pension or a retirement plan or having that extra money so that you, Sohail, could have had a better pair of jeans or a pair of glasses or braces or whatever it is that you might have needed that you didn't get when you were a kid, they, of course, would have taken less or put less away for their retirement. But thank God they didn't. That's actually something that the retirement plan, the defined contribution plan, which is, as we all know, 401ks, 403bs, 457 plans, where self-funded by the employee is much less gratifying, fulfilling, and fiscally taking care of you in your older years than a defined benefit plan, which said that you will get this. But it broke a lot of companies. There's a lot of companies that had these pension plans that weren't well funded and went to zero. So, there's a trade-off. That being said, that's a different conversation, other than to say that you have no choice but to save for yourself, to take care of yourself for retirement, because you will not, unless you really take care of it, you will not be in a position to help your parents, and no one's going to be in a position to help you.
Well, my 20s was, just to kind of put a period on this, like my 20s was me straying, exploring from my goals. As a kid, you're always like, yeah, I'm going to be rich, take care of my parents, right? And then you realize what it means to be rich, what it means to be wealthy, how the world works, working jobs, being W-2, being contractor, working for yourself, done all of that stuff. And then you fall in love and things change again. But just establishing your goals, and what y'all said last week, that in your 20s you learn
in your 20s and you earn in your 30s.
In your 30s, and I'm confident in that. And maybe I don't have 401k, but maybe, I'm a ambitious, creative person that, luckily being here and just being around you guys, it's definitely something I can do. It's just kind of niching down, or not, just figuring out how to make the dollars come in with all the multiple skills I have, and it'll happen. So,
what I think is really great, what I find really fascinating about the time that we're living in now, before I was kind of worried about it, structure. Everyone needs structure. You've got to go to work at the company. You've got to sit next to somebody. You have to have a mentor. Now, I still believe people should have mentors, and people should want to be engaged with each other as people, not just on a Zoom screen or a podcast, right? I think that there's really value to understanding other people's point of view, and you only get that by spending time with them and interacting with them and understanding how people work. Now, that being said, it has been fascinating, the technology and the move forward that we have had in the ability to learn what other people do, and see that, most of my friends ended up doing something similar to what their parents did because they were comfortable with it. They saw it. They knew that it was a successful model, and people like to do what they understand and they can move into. But now, especially, and when I say this specifically to this wonderful group of people that I get to come in and see every day. You guys get to work with so many different people that do so many different things, and every one of us wants to help. And it's like, look, if you found an interest in it, if you had the personality type for it, and you were good for it, in a heartbeat. As we all know, it's hard to find good help. You find a good person that really meshes and does really well with something that you do, and you think you can mold them, it's a layup. As we all know, college education, for the vast majority of people going to school, just shows you're trainable. They're the specifics that actually are very important. But how many people have you met? How many people have you talked to that are on different podcasts here, didn't even go to school, and are wildly successful? I'm thinking of two right now. I had one, it's on the show with one a couple of weeks ago. Unbelievable things and unbelievable ways to make money. The American dream is still alive. You just have to be hungry, and you have to have your own plan. Because if you don't have a plan, if you don't have your own plan, someone's going to plug you into their plan. And it may not be the best plan for you, but shame on you for not coming up with it yourself. Thinking, huh? Got you thinking.
Well, Frank, I think we're similar in ways in which we are both people. Like what you said about spending time with people. I'm extremely. That's all that's important. That's the most important thing to me in life.
Yeah.
The having a plan thing and working with disillusionment around the economic structure of the society I live in and the inequality at harbor, everything we've talked about, me and you, on this podcast. But then, realizing, hey, find an avenue that's the least harmful, I guess, or not harmful. And the person you're talking about who didn't go to college, who's wildly successful, I wouldn't say is an evil landlord. You know what I mean? Even though maybe inherently being a landlord is evil, but you know what I'm getting at? Like that, I'm getting to a point of feeling like I deserve it.
Yeah. Well, hey, how about instead of deserving it, earn it and then know that you are worth it, right? So for me, yes, I'm in a financial management role. Guess what? I chose that. It wasn't something given to me. I got my degree in something completely unrelated to finance, but it was fascinating to me. And because I happen to have a degree and I knew how to write and I knew how to read, the company that hired me, thank you, Fidelity Investments, for hiring me and taking a chance on somebody who had nothing to do in their background in finance. But what I did get was I got the opportunity to learn, and I took it seriously, and I was good at it. And as good at it as I am at the specific skill set that I have, my success did not come specifically from being in finance. My success comes from the relationships that I've made and helping all of my clients make money, whether it's in the market or outside of the market. I'm a relationship-driven person, and if I hear something that someone's doing that someone in my tribe is like good at, I'm going to put them together because that helps everybody. And because of that, my clients will always take my call. They may take a day to get back, but they will take my call because they know I am not out to get them to do something. They know that I'm contacting them because it's something I know they may be interested in, right? And who's not going to take that call?
Yeah, I want to clarify when I say I deserve it. I hope this makes sense because this is kind of a weird. I'm not saying it in a like lazy millennial way. I'm saying deserve to earn it.
I've earned it. Yeah, like I
deserve to earn it.
Yep. I get it. I just wanted to clarify that point because I do think a lot of people do feel entitled to certain things. And okay, now this is probably one that you're doing a short. Oh God, man! I was walking down the street, literally walking down the street, going into a restaurant to go pick something up, holding the door, and like nobody cares anymore. You guys are inside. You're in the air conditioning. I'm in the heat. I don't want to sit here and wait holding this door while you're talking. Walk through the door. How about that? Oh, and how about not walking 3 or 4 abreast so I can't walk by, that I have to get on the grass? What the fuck, people? Okay, you can cut that part. I'm just ranting now. I'm fucking angry.
No, I think I really like this version of Money in the Bank with Frank, this Sal podcast. Mark and I were talking about it, and we'll talk about it more in a few minutes after Jim. But I think it would be super beneficial to. So right now we did kind of a general, thing. But what if I had brought you my info? You know what I mean? You could audit it right before talking to me.
Yeah.
And getting specific because there's people out there like me,
Well, see, okay, so now we're going back to that same conversation that I said before about how the average age of a financial advisor is in the upper 50s, if not in the 60s. And quite frankly, we don't care anymore, right? Like, I have a mature book of people who do respect me, and I'm not here to like hold hands with anybody, but oh my God, please ask me for advice. I've been through every stage of that life. I have life experience. What is experience? We talked about that. Experience is what you get when you don't get what you want, right? I've got life experience. And if you want to take advantage of that so you don't have to make those mistakes, talk to me. But don't think for a minute that I want to go out there and give everyone my experience. I give you guys a lot of experience here on the podcast because it's fun and because I want to help my fellow man. But I'm not going to go out of my way to like feel sorry for my industry because nobody likes us anymore. It's your fault, and it's, to your detriment to do something about it.
But okay, so where I see my skill set is content, and how content, does this.
Yeah.
And you see that too, and we talked about it yesterday. So
yeah. So I have done this, and I'm going to do it again. I'm going to do it right now with you. I've done it before on every other medium I was on both radio shows that I was on before. I did it when I was at the accounting firm in New York when I shared space with them, to actual CPAs and people that were in the industry. I did it with people that are in the same industry. I will do a financial plan for you. If you give me the information, you take the time to spend some time with me, I will walk you through what you need to do to be successful. I'll give you that path. But you have to find the time, and you have to come to me.
Yeah, and it's...
and you know what's going to happen? You're not going to do it. But I challenge you to do it. I mean it.
Are you saying me, or are you talking to people?
I mean you individually.
I've been thinking about doing that a lot. I just don't want to... I don't want to take advantage of our relationship,
I got in this industry to help people to be better.
But why do you think
my clients now, I work with very wealthy people now because they're the only ones that value it, but they don't need my help as much as you need my help.
Yeah, I mean, why do you think I wanted to do this last week, this one, but because I'm ready, because I am doing it. I want to do it, but so
you know this Indian book. It's this big fat thing called the Mahabharata.
Mahabharata.
When the student is ready, the teacher will appear. Hi.
Been thinking about that a lot. Hi, Frank. What's your name?
What's your name? I hope all of you guys enjoyed that episode of Money in the Bank with Frank. Little snippets of the kinds of things that you should expect in a conversation with a financial advisor. Obviously, make sure you bring all the stuff, all the documentation, everything you need so that he has a full idea of what you guys are doing and what you're thinking, including insurance information and coverages, because that is very critical, surprisingly more critical than you think, more than just like the securities you have and the accounts you have. But anyway, as I said, just want to say thank you so much, and I hope you guys watch the rest of the show. I hope you watch some more episodes. Feel free to see us on YouTube, on The Merge, and all the other social media sites that we're at. Thanks so much, and have a great day.
Hey, thanks for watching The Merge. We've got a ton more stuff for you to watch on YouTube, on Instagram, on TikTok, everywhere. Check us out.